Have you ever wondered what is the best withdrawal sequence when you're starting to take money out of your accounts for retirement? I did an experiment and I want to show you how we did the experiment and how the numbers turned out. Let me give you a quick preview of what this looks like. So in this spreadsheet, I took a couple, had them start Social Security at age 62, and I assumed that they had three different types of an accounts: a savings account, an IRA, and a Roth IRA, and the money was equal amongst all three of those accounts. So I just assumed they had $500,000 in savings, $500,000 in their IRA, and $500,000 in the Roth. And then I tested to see which of the accounts produced the highest value at the second person's life expectancy, and in which account did they pay the least amount of money in taxes over their lifetime, and then in which strategy did they end up paying the least amount of money in taxes, not just over their lifetime, but also the money that ends up being left to their beneficiaries. And that's what this spreadsheet shows. But let me show you how I did this, because the reality is every person's situation is going to be unique to you. It's going to be based on your own plan and what you've actually saved. And there's a lot of little nuances in here, things like if you retire before age 65, you have to take into consideration that if you keep your income artificially low, you can qualify for the affordable health care credits to keep your health insurance premiums low. If your income gets too high, then things like Medicare, IRMAA could come into play, and you pay more money for Medicare after age 65. So a lot of little things you need to be thinking about as you're making this decision. But let me show you how I did this in the retirement budget calculator, and it might be a fun exercise for you to play around with your specific numbers to understand what's going to be the best strategy for you. Okay, so let's dive in. For this exercise, we're using the retirement budget calculator to create a retirement cash flow plan. And the only variable we're going to change is the withdrawal order in order to keep all things equal. So we'll log into the calculator and I'll show you how this works. Once inside the calculator, you'll notice I created a very simple strategy. I have John and Nancy here. They're both 62. His life expectancy is age 82. Hers is age 85. And then we have a Roth IRA, a savings account, and a traditional IRA. Each of these accounts have $500,000 in them. We show that they're going to have a little bit of income from Social Security, $4,000 per month. And then their budget is pretty simple. We just created a very simple budget with essential expenses at $5,000 a month and discretionary expenses at $3,000 per month. And then over here on the future view, you can see this is where we model things out. And in every scenario, we assume that all of their money is just growing at 4% per year. And anytime there's a red here, you'll see these are the withdrawals that are being taken. And so what I did in order to test this, the only variable that I changed was the retirement withdrawal sequencing. So over here on the Assets and Liabilities tab, you'll notice we can change the withdrawal order. So in this scenario, we said, what if they dip into the Roth IRA first, the savings account second, and the traditional IRA third? And then I also created a model where I said, what if we did the savings first, then the traditional IRA, then the Roth IRA? And I just created several different scenarios. In each scenario, what I was looking at is what's the value of the accounts at the second person's death. And then also one of the things that the calculator does is it estimates federal income taxes. And so we could say, how much money would they pay in lifetime taxes over both of their lifetimes? And that gave us a baseline to work from. So let me explain the spreadsheet to you now. Okay, so the way the spreadsheet reads, you'll notice the green is the best case scenario. The second place would be orange, third place is yellow, and the last. So over here, you'll notice if we did the savings first, then the IRA, then the Roth, that produced the lowest ending value at life expectancy and the worst in terms of total lifetime taxes. So now if we were only evaluating this on who ends up with the most money at the end of life and that paid the least amount of money in taxes, the best strategy initially you would think, well, if I take from my Roth first and then my savings account and then my IRA, I end up with a balance of $1,032,381 at the second person's death. And I would have paid lifetime taxes of $55,591. But that doesn't tell the whole story, because what happens when you die, we have to look at how the accounts are going to be taxed at death. And so in this scenario, I said if there's money left in an IRA, we just assume that that gets a lump sum paid out to the beneficiaries, and they get taxed at 35%. So that creates an additional tax at death of $254,000. And so now you can see not only over their lifetime, but what happens when they die. They end up paying $309,000 in taxes, and they have the lowest ending value that goes to the beneficiary, $722,000. If what we're trying to solve for is paying the least amount of money during their lifetime in taxes, paying the least amount of money in taxes at death, and ending with the highest value after tax to the beneficiaries, the best strategy ended up being tapping into the IRA first, then the savings account, then the Roth. You'll notice here lifetime taxes $81,327, and the ending value to the beneficiaries $925,391. So what you can do in the retirement budget calculator is you can play around with these numbers for you. Change the withdrawal order around. It's very easy to do. Again, all you do is change these numbers. And if you want to see what it would look like to take equal distributions, so that was one of the strategies we did in the spreadsheet, was he said, what if we tapped into all three of these accounts equally? And you can see that actually produced some pretty good results. The ending value is $1,012,000, lifetime tax is $71,000, tax at death was $59,119. Total tax over lifetime and inheritance was $130,000, and the ending value was $881,202. Again, when you're doing retirement planning, it's really going to be specific to your situation. What kind of accounts do you have? What's the taxation of those accounts? And this isn't taking into consideration all of the taxes you might pay, but it's helping to at least paint a picture for you where we keep everything constant from plan to plan just to see how the numbers work. Hope you found this helpful. Thanks so much.